budget for FY21 was presented against a backdrop of weak growth in the Indian economy, the weakest we've seen in years. It was also presented against a backdrop of lots of concerns about the quality of India's fiscal reporting. So there were two divergent things that the finance minister had to address when she stood up this morning on a Saturday. She had to try and address the growth concerns, but she also had to try and address the fiscal credibility concerns. Did she manage to do both or either? Joining us for a big picture view on the budget is Dr. Indira Rajaraman, former director of the RBI Central Board, member of the 13th Finance Commission as well. Ma'am, thank you so much for speaking to us here on BloombergQuint. I have a ton of tiny my questions on the minutiae of the budget, but I do want to start with a big picture view. Did you see this budget as a document that needed to give us a roadmap for improving growth from here on? And if you did, then did it meet up to your expectations?
Yes, I think not just I, but all of us were hoping that the budget would provide that roadmap at what is a very, very depressing growth situation. But although it did make a few attempts in that direction, it was disappointing, I have to say. It was also disappointing from the point of view of the other factor that you mentioned, the fiscal transparency issue. So disappointing, yes. There were a few good things lost in the huge verbiage surrounding the budget. It went on for 2 3/4 hours. And even so, the finance minister couldn't finish what she wanted to say. So a very voluminous speech, a few good things in it, but disappointing nevertheless.
Ma'am, let me go straight into fiscal credibility first. There were a couple of things that stood out. One is that, of course, you've seen a slip for FY20, you've seen a slip for FY21, you've invoked a rare escape clause, but also revenue deficit as a percentage of the overall fiscal deficit seems to be rising. What, in your mind, is sort of the fiscal picture as we go into a new year?
Well, actually, I was hoping that what you call the fiscal slippage of 0.5% both this year and next would be actually even larger, which might sound a bit strange to you. But what we needed at this time was a big fiscal expansionary movement and disregard of the limits enshrined in the Fiscal Responsibility and Budget Management Act, simply because this is such a very critical situation in terms of growth. Even the International Monetary Fund sanctioned a short-term throwing away of the fiscal deficit limits as long as there was a perceived or a visible commitment to medium-term fiscal consolidation. So on that count, it was disappointing that this opportunity was not seized by the finance minister to correct a number of fiscal deficits that have crept into the situation, such as, for instance, deferred payments. Even the PM Kisan scheme has seen deferred payments. And as you know, states have not been receiving their compensation under the GST Compensation Act. So there has been a number of ways by which expenditures have been swept under the carpet, deferred, just in order to meet these deficits, which are not sacrosanct. A fiscal deficit is not meant to be adhered to by postponing expenditures.
And there is still a significant element of understatement, ma'am. You're pointing to the deferred expenditures. For instance, FCI is continuing to borrow from the National Small Savings Fund. I think there's about 90,000 crore on FCI subsidy payments, yes, which has been pushed out. So there is, the headline slip, but there is still a lot under the carpet, which some had suggested they bring absolutely on budget, but they've chosen not to do that too.
That's right. That's right. This was a huge lost opportunity. I was hoping that at this particular juncture, when no one would blame the finance minister for having thrown away fiscal limits, the opportunity would be seized to restore transparency and trust in the fiscal system. So this is a great lost opportunity, I have to say. And I must also add that the disinvestment projected receipt of 2.1 lakh crore is far too high to be credible. Although there is mention of how the government will divest some of its stake in the Life Insurance Corporation and in the IDBI Bank, it simply cannot be that the recoveries from those and maybe from some other strategic sales could possibly touch 2.1 lakh crores. So we still suffer from a lack of credibility as far as the fiscal situation goes. And as I said, this was a lost opportunity.
Ma'am, we also saw the escape clause being invoked. I don't want to make too much of it, but because the government hasn't given us any indication that they will indeed ask the RBI to prescribe to government securities as part of primary auctions. But that is something that was linked to the escape clause. And we were speaking to Dr. Rangarajan earlier, and he rightfully cautioned that you cannot go back in that direction. Would you share that sentiment?
Yes, absolutely. That would be an unfortunate slip, but it's relatively minor, I would say, in terms of the issues that worry us. Perhaps the finance minister could have said explicitly that that clause will not be invoked. But as I said, I don't think the slippage in and of itself is anything to worry about. As I said earlier, I would have been quite happy if the fiscal deficit reported for this year had been much higher than what it has been permitted to be, as long as the opportunity had been taken to bring a lot of deferred payments back onto the books and to prevent this kind of seepage, so to speak, of expenditures and subsidies and so on seeping out of the online budget into the offline sources of borrowing, which has happened again this year.
Sure. Ma'am, one more question on the fiscal side before I move to a bigger growth story as well. So I think the interim report of the 15th Finance Commission was tabled along with the budget. So they seem to have broadly retained the devolution formula,
yes,
but they have done a carve out for Jammu Kashmir and Ladakh. Is that okay with you? There's also a disaster relief fund, but some of the other broader issues such as a separate fund for defense, etc., seem to be relegated to the final report.
That's right. I don't, in fact, have very detailed knowledge of what was in the interim report, precisely because it was not in the public domain until today. But what I understood, since I'm on the advisory council, was that the status quo would essentially be maintained for this year, and all the big issues like defense would be addressed in the final report. But the carve out for Jammu and Kashmir is something that they simply had to do because of this awkward transition from Jammu and Kashmir being a state to being a union territory. So this is a transitional kind of arrangement that they had to do. It happened mid-year. But in the larger report, they may or may not have a carve out. I don't know. But yeah, the 15th Finance Commission interim report was just a holding arrangement. We have to wait for the final report to see what they will prescribe.
All right. That allows me to move to some of the other issues. One was spending, ma'am. So the total expenditure increase is not that large. What kind of expenditure would you have liked to see in a weak growth economy like the one we're witnessing right now?
Yes. Well, as you know, in December, the finance minister announced an infrastructure pipeline, which was very ambitious, amounting to 103 lakh crore. But what has actually been provided for infrastructure in this budget is very low at 22,000 crore. This will be given to one of the infrastructure funds, and it is expected that they will leverage it up to 1 lakh crore investment in all. That is really very, very small. If you were planning an infrastructure pipeline of 103 crore, it was imperative that much more of it should have been provided for in this budget upfront. But once again, this would not have been possible unless they had been willing to relax the fiscal limits, which clearly they were not willing to do beyond this small 0.5% of GDP, which they have permitted themselves to do.
Ma'am, the personal income tax rejigging, if that option is taken, could, provide at best a sentiment relief. It's not, a tool which would have economy-wide implications for sure.
Yes, this was very much of a sentiment issue. The middle class, however you define it, had been suffering from a sense of neglect, strung as they were between the rural India, which they felt was getting a lot of attention, fiscal attention, and big business. And so this is a sentiment booster. I don't think it's going to do very much for consumption at all, but it's going to carry the headlines, and it's certainly going to give the budget a rosier tint than it would otherwise have had. Yes.
Ma'am, on the financial sector as well, commentators have suggested that they're disappointed. There was no major announcement on NBFCs, although I'm not sure those are things which are in the purview of the budget, but yet there was an expectation building up. On the banking side, well, maybe they tried to impart some confidence by increasing the deposit insurance.
Yes, yes. That's a very small thing, from 1 lakh to 5 lakh. But yes, that again, it's actually a middle class sentiment booster once again. But I'm happy to say that in terms of structural reform, there was one thing which has not been commented on too much so far, which was, that in the 16 items that were listed for agricultural reform, the first item was reform of land leasing, contract farming, and marketing, product marketing in the agriculture sector. That is a much needed reform of land, a major factor of production in the agriculture sector. The only problem is that these laws have already been enacted at the center, and states have to be incentivized to pick up on them, to enact state laws aligned with the central law or modeled on the central law. That hasn't happened so far. And there is mention that states are going to be incentivized to do this, but how exactly they will be incentivized is not clear. So much has been left unsaid, but I was happy to see that there was recognition of that. Another good recognition, very, very important from the purview of getting investment going in a sector that is job generating, was the provision for medium and small scale industry, small enterprises, to get a factor financing for delayed payments. Once again, delayed payments is a economy-wide problem, and small enterprises face it particularly acutely. So there was mention of amending the factor law of 2011 so as to switch to bill to factoring payments rather than bill discounting. This will change the willingness of banks to extend finance to small enterprise, and that was a very, very good move in the budget.
Thank you for drawing attention to those. We hadn't, as you said, commented widely on those particular issues. There was also a broader sort of, reiteration of the commitment on the farm sector to double incomes. There was a focus on warehousing. Those two, in small bits and pieces, do add up to a support to the rural economy.
Yes, absolutely. Yes, of course. The most important is the bit about reforming the factor market. But yes, warehouse receipts and making them saleable and so on, securitizing them. These are all good moves. They have to be done in conjunction with the RBI and other financial sector institutions, regulatory institutions. But yes, important moves, recognitions of major problems bedeviling investment in agriculture and productivity in agriculture. Yes.
Sure. Ma'am, a couple of other aspects which I'd love to get your thoughts on. This one goes to actually not a very detailed line, but they talk about opening up certain segments of government securities to larger FVI participation, and on corporate bonds in particular, they say they want to increase the limit to 15% from the current 9%. They don't say it, but it looks like they are endeavoring a listing on global bond indices. Is this a move towards fuller capital account convertibility step by step?
Yes, certainly. I think these are small steps which are being taken quite tentatively. If you remember last year, in the last year's budget, there was a reference to reaching out to external financing by issuing sovereign bonds. That announcement in the budget was essentially rescinded after a number of people in the system pointed out the perils of doing something like that. So these are small steps in that direction, in that overall direction, not sovereign bonds, but getting more external funding into the debt sector in India, and I think this incrementalism is a good thing, rather than a sort of wholesale switch to issuing sovereign bonds. Yes.
The bigger picture, though, there, ma'am, is that we are feeling the need for greater sort of foreign savings. Your domestic saving pool is getting taken up by public sector borrowing requirements. So whether it's through external commercial borrowings at the corporate sector level, or the government drawing in more FPI flows into domestic markets, government securities and corporate bonds, this is all signaling a greater need for reliance on foreign savings, isn't it?
Yes, absolutely, yes. Reliance on foreign savings, and there has also been some incentivization of that with some tax relief for foreign portfolio investors. So altogether, reaching out for foreign savings is a wise move at this juncture, when global interest rates are quite low and there would be foreign portfolio interest in the country. But at the end of the day, what has to be focused on is the real economy, the impediments to real investment, the impediments to transactions in goods and services, the infrastructure impediments. So we have to keep coming back to whether the program of action on the government front and incentivization of private action, private investment, whether that was sufficient. And I fear that that was not quite sufficient.
So would you then say that the expectation that you would go from, say, a 5% growth rate in FY20 to about 6 to 6.5%, which is what the economic survey had suggested, is a reasonable expectation? The budget, the budget has talked about a nominal GDP of 10%. It's not completely out of line of expectations, ma'am?
Not completely out of line, certainly not. The inflation rate is already, as you know, even if you disregard the present 7.5%, 7.35%, which is a sort of onion-included inflation rate, still we are talking about inflation probably in the region of 5-ish%. So even if growth were at 5-ish%, nominal growth rate of 10% is not out of reach. It's possible, that the combination, the variety of things that has been done, even if each thing is too small to be really growth promoting, it's possible that we may well see growth above 6%. Whether it'll touch 6.5, we don't know, but yes, I think we may be able to jump to the 6% platform if all goes well.
Would there be, like you said, if the fiscal side has not sort of provided any great impetus to the economy, would there be continued pressure on monetary policy, ma'am? I'm not sure whether there's room there or not, but do you see monetary policy continuing to act as the supporting factor for the economy in FY21?
I don't think there's very much room for monetary policy action at this time. It would be very strange if a further monetary repo rate cut were to be done at this time when CPI inflation, which is what the Monetary Policy Committee is statutorily commanded to keep an eye on, is at 7.35 and not expected to go down very far in the nearish future. So I don't think there will be too much pressure. I certainly think they will be looking to the Reserve Bank for an interim dividend, which will probably be paid. I can't guess the size of that dividend. We will know only as March approaches. But beyond expectation of a good dividend payout, I don't think there will be very much pressure on the RBI to contribute monetary easing to this situation.
Ma'am, one way in which the budget is complicating the monetary policy, or at least the transmission of monetary policy, is these very large borrowings from the small savings fund now. Last year, they've done 2.4 lakh crore, that's FY20. Yes. FY21, they're budgeting another 2.4 lakh crore. How do you look at this?
That's right. You're absolutely right. Transmission has been hobbled in India by the high rates on small-scale deposits, small savings deposits, and because the government is leaning so heavily on borrowing from the National Small Savings Fund, it is not likely to reduce that deposit rate very soon. It wants to keep those deposit rates attractive to attract funding. Technically speaking, borrowing from the National Small Savings Fund is not illegitimate or incorrect in any way. If you recall, before the 14th Finance Commission mandated that states should not be compelled to borrow from the National Small Savings Fund in accordance with collections in their jurisdictions, which was previously the case. In fact, I think the 14th Finance Commission actually barred states from borrowing, except for a few states which would be permitted to do so. There was an issue of where those savings should be invested. And since government securities are still gilt securities, low zero risk securities, it's not out of line for the government to be borrowing from the National Small Savings Fund, but it's a large dependence, you're right, and it does put a spanner in the wheels of monetary policy transmission.
Fair enough. Ma'am, one last word. Firstly, if I've missed any major points that you want to flag off, but also, everyone says that we focus a little too much on the budget. There are lots of parts of the economy which are not part of the budget. So what would you like to see the government focus on away from, sort of the allocations, etc., in the year ahead to provide whatever boost possible to growth?
Well, one of a very good measure in the budget has been the attention to the working capital requirements of small enterprises. I mentioned this before. Small enterprises in India are really the growth engine of the country and the employment engine of the country. And they have had a very difficult time after the introduction of GST. What I would have liked to see happen, which didn't find a mention, was a reintroduction of a feature in the GST which was part of the original design, which was to have something called a reverse charge mechanism, so that when a large enterprise buys inputs from a small enterprise selling to it, the GST on that transaction is actually paid by the buyer instead of by the seller to GST, and then they can claim input tax credit on it. So they don't lose anything by that. But what does change things if you have an RCM is that they would be willing to buy from small enterprises. For a long time, corporate production of white goods, motor cars, scooters, you name it, have had a number of inputs supplied by small enterprises. Nuts, bolts, brakes, brake linings, the very large number of things, seats, seat covers, which go into a vehicle, or handles and so on into refrigerators and so on. Now with the introduction of the GST, when RCM, the reverse charge mechanism, was suspended in July 2018, the willingness of large enterprises, GST registered enterprises, to engage as buyers with non-registered enterprises really crashed. With that, these small enterprises had to close, and a lot of people were laid off. And as you know, rural India is dependent as much on remittance income from workers working outside the rural sector in small enterprises, or even in rural India, but in small enterprises in nearby towns and so on. That income supplement is a very, very large proportion of their purchasing power. So that's one of the reasons why growth has been so hard hit, and I would have liked to see a restoration of the reverse charge mechanism.
All right, perhaps that would be taken up during the course of the year within the ambit of the GST Council. Ma'am, thanks so much for joining us here. That's Dr. Indira Rajaraman, former director of the RBI Central Board and member of the 13th Finance Commission, sharing her thoughts. Does not believe that enough has been done in this budget on growth, also not on fiscal credibility, where the government has faced questions. Thanks for watching BloombergQuint. Do go on to BloombergQuint.com for a lot more on the budget.